Should I invest in my company's 401k? My name is Carmen.
And my name is Darius.
And we are the founders of Wealth Nation. With this question that we get all the time, we aren't going to give you a yes or a no answer. We know you want it, but we're not going to give it to you. And the reason being is because instead, we're going to ask you 3 simple questions that we hope will help you answer this question for yourself. Because at the end of the day, it's your retirement, and you need to make the best decision for yourself.
Yes. Question number 1. Do you think a dollar is worth more today or in the future?
I think a dollar is worth more today.
Absolutely. Because think about just a few years ago, 20 years ago, how much did a can of Coke cost?
25 cents, I think.
Okay, now how much does it cost today?
At least $1.50, maybe even $2.
Inflation.
Yeah.
The same $30,000 today would be worth a lot less
in the future.
30 years from now. So let's think about that as we go through these questions.
Gotcha.
Question number 2. Do you think taxes will go up or go down?
I think the characteristic of taxes is that they always go up. I've very rarely seen them go down.
Think about even just in our lifespan.
Yeah.
Taxes has gone up. So by the time that we retire, 30 years from now, again, we're using the same time frame, those taxes traditionally go up.
Yeah.
Question number 3.
Okay.
Tax question again.
Yeah.
Would you rather pay taxes on a small amount or a large amount?
Small amount.
All day, every day.
Small as we can get it.
There you go. All day, every day, and twice on Sunday. Let's think about it as like a farmer or someone in agriculture. Do you think they would rather pay taxes on the seed or the harvest that they produce that season?
I sure hope it's the seed.
Right, because that seed produces a ton of harvest. So they would be paying taxes on a huge amount of harvest.
Yeah.
So is that something that you think we want to do? You said no, absolutely not. I would rather pay taxes on a small amount or the seed all day, every day.
Then the harvest. No, I don't want to pay taxes on the harvest.
Right. So again, let's recap the 3 questions.
Okay.
Do you think a dollar's worth today or tomorrow?
Worth more.
Worth more. Yeah, that's what I said. Is a dollar worth more today or tomorrow?
Today. Dollar is worth more today.
Okay. Do you think taxes will go up or go down?
Up.
Okay. Would you rather pay taxes on a seed or on a small amount or a large amount?
I'd rather pay taxes on the small amount, which is the seed.
Okay, there you go.
Awesome. How did you fare? How did you answer those questions? So now let's package that into the 401k. So the first question Darius said is a dollar worth more today versus tomorrow? So being that the answer is a dollar is worth more today, think about your 401k. You're putting in valuable dollars into an account today, and the intent is that you're going to use those dollars tomorrow or whenever you retire, and now that nest egg or that stash is significantly worth less because of the amount of time that has passed. So Darius said $30,000. You put $30,000 into a 401k today. 25, 30 years from now, $30,000 is not the value of $30,000, so that changes things.
Yeah, let's say hopefully they have $1 million, but still, $1 million isn't $1 million.
30 years from now, absolutely not. And then taxes. The one thing that people like about 401k is they're thinking, oh, since I'm not taxed on this income from my paycheck, they're going to collect it from me later. Perfect. Let's defer the taxes. Let's push it out. No, you don't want to do that. Why? Because of what we just said. Do you want to be taxed on the seed or the harvest? And also, since we know taxes are going to continue to go up, every single time you put money into the 401k from your paycheck, those seedlings are not being taxed. So what happens come 59 and a half when you're ready to retire, you're going to be taxed on that stack of cash that you've been accumulating over 20, 30, 40 years time. You're going to be taxed on the entire harvest. Not to mention, now you're hit with inflation. That nest egg that you've been saving is significantly depleted because the value isn't as strong anymore, and you're going to be taxed on that whole accumulation. So that's why you find so many mature individuals are having to go back to work in their 60s and 70s because they can't afford to be retired, because those main two things are not taken into consideration.
Yeah.
So just to recap, I hope that this makes sense. Again, with a 401k, you're putting in pre-tax dollars, so meaning your money is not being taxed when you deposit that money into your retirement account. Mm-hmm. It is going to be taxed at the end when it comes time for you to retire.
Now, you didn't mention anything about the fees associated with managing those funds, which is something else that we should take in consideration. Is how are those fees being drawn out or paid in your retirement account? Mm-hmm. Because they have to get paid, because they're constantly moving that money to make money. It's an investment. Mm-hmm. So that investment costs money.
Totally. Just things that you need to think about. So we hope that those 3 questions and putting them together brought some clarity to your decision. And one thing that I know people talk about a lot is, hey, but my company matches. Good for you. But another thing, same thing. Ask those same 3 questions to the match that your company is providing. Mm-hmm. Because again, you have more money coming in. That's more money that's subjected to inflation. That's more money that's subjected to taxes. And really, when you think about it, if you put money in a freezer and wait 30 years to eat it, that's essentially what you're doing. How good do you think that money is going to taste come 30 years from now, regardless if you had a match with it? It's all going to be stale and spoiled at the end of the day. Right. So the company match is definitely something that seems appealing, but again, you got to know exactly what's going on. Am I missing anything?
Nope, you're not missing anything, but I'm sure we're going to have a few people come on and say we're missing something. We are not retirement experts.
Good point. Good point. So always consult with your retirement expert, but take this knowledge to the table at your next appointment.
Research. Mm-hmm. What has the company been doing over the past 100 years, 50 years, or however long the company's been in business? What has been paid out? What are they investing in? Mm-hmm. Is that something that you would invest in on a personal level? Don't leave anything to chance. Control.
All right, guys. Well, I hope you have a great day. Don't forget to subscribe to our YouTube channel and also follow us on Facebook and Instagram at wealthnation.io.